Good morning, Predicted Trades family. I'm going to run through a quick review and prep, right? Want to cover a few key things for those folks that maybe weren't here last week, or those folks that this whole drop doesn't quite make sense. So, last week everything was looking decent and rallying. Monday, Tuesday, Wednesday, then Thursday, Friday we have our big sell-offs, right? Let's go back to ES. On ES, we fought up through the daily moving averages and peaked our head above this yellow line, which is the daily 200, which has kind of flatlined at this 44.89 key level, right? We popped above that daily 200 just for a second, just to tag this 45.10 key level. Then we lost the daily 200, and then we just dove through all moving averages, right? On Friday, we rejected the closest moving average, the daily 8, and we just kept on selling. And if you see the hash lines, those are the daily Keltners. We almost tagged the first Keltner up, sold through the mean, first Keltner down, second Keltner down, which we are settling up on this morning. So in just 2 days, we go from kind of our first ATR up to 2 ATRs down. Now this also aligned with YM getting up to a big fat daily squeeze, right? We've talked about these squeeze clouds, and when they're thick like this, our probability of getting through is very, very low. We usually run into them and grind along them till they get nice and thin. Then we start to get going. When we run into a big fat one, you need to be ready for a reversal, and that's exactly what we got. YM got into that daily squeeze just on Thursday after rejecting it Wednesday, and straight down out of that daily squeeze right down to the bottom. Another thing to check, Vixx. Vixx settled down under all the daily moving averages, Monday, Tuesday, Wednesday. But then Wednesday, Thursday, it ran into 20. If you are not aware, 20 is a very big key level on Vixx. Below 20, we can start thinking bullish again. And so when we were starting to hit 20, and with most of the indices over all their daily moving averages, that was a key point. We need to give out 20 to continue the journey higher and push off of the daily moving averages. That did not happen. We rejected, we bounced at 20, and so that can spell a rejection of all the daily moving averages, which is what we got. And we beeline it from 20 pretty much straight to 30 now, pre-market. 30 is another key level. Also on Vixx, we were at 1 Keltner down. Now we're at the second Keltner. So just pointing this stuff out because it does all align, and a lot of times it all aligns perfectly to make a very clear thesis in a very clear direction. You know, if we go back a little further, Vixx has lived above 20, you know, all year. Back here at the beginning of January, it was peaking back below 20, hit 16. See that 1650 key level? Bounce there. And we've spent the whole year above 20. So when we get back to 20, you got to keep an eye out for another rejection and sell-off. That's what we got. So now, going into today, what do we do? What do we play? Very simply, my main focus is going to be spies and cues. We are at a lot of key levels that were established January and February during these sell-offs. This shaded zone down around 4140 is the lows from the whole Russian invasion. This is the zone that held us and sent us back up. Just like this shaded zone up above is what we have been rejecting since mid-January. So those are my key zones right now that we keep bouncing at or rejecting. And then I have, you know, some key levels in between as targets. So when I look at ES for today, we've got our squeeze cloud. We've got a 30-minute squeeze. It is nice and thick, so we can get up to this 4260, maybe even reach out to this 4273. We are below the 30-minute Ichimoku, which can be a good gauge for a continuing trend. So we can run all the way up and touch this. We would most likely get a rejection for the trend to continue lower. So right now to the upside, and we're starting to head there before open. 4260, 4273, creating a zone for rejection right at around this 30-minute squeeze, or 30-minute Ichimoku. We could easily just reject one of these levels, never touch the 30-minute Ichimoku, much like we did on Friday, and head lower. We have the third Keltner at 4165, and that key zone down at 4140. So we could, I mean, they could make it a 1, 2, 3 day straight from zone to zone, and then kind of get what's a relief bounce. We do have all of big tech reporting this week. Apple, Amazon, Google, all of them are reporting this week. I posted it in our chat. I guess I'll pull it over just to show it. Where did I put it? There it is. We have a lot of key names reporting this week, a lot of big tech names. This is the important week of every earnings season with Microsoft, Google, let's see, we got Amazon, Apple, Roku, we've got MasterCard, Visa, we've got GE, PS, just basically everybody, Boeing, Pinterest, everybody this week. So definitely something to keep an eye out for. It is going to be elevated premiums on most of our names. It will be, for me, not touching a lot of these names until they start reporting. Morning Snail, Morning Star. Thanks for tuning in. So let's see. I think I've covered ES, kind of watching for this zone to reject and for us to come test these to find a base. We could get as low as this 4140. Should we get through this zone and this Ichimoku, this is the next key zone, right where this daily Keltner aligns with this 4327. So upside downside targets. In Q, kind of the same thing. Got our 30-minute squeeze. I have way too many levels in here. That's the one I want. Sorry. So, we have a zone down below that aligns with this 30-minute squeeze bottom. Could we stay in this 30-minute squeeze all day and just chop back and forth from zone to zone? Yes. So definitely be ready for that. This 30-minute squeeze does not have to give out. And let's see. No big names are reporting today. It kind of all starts tomorrow after the bell with Microsoft and Google. So yeah, today could definitely be a chop day, leading into two huge names, Google and Microsoft, a lot of weight. So we could just chop today and tomorrow, leading into their earnings. These are my upside targets. On these videos, you can go back, you can pause, you can write down what these numbers are and go mark them on your chart. That kind of thing. Should we reject, squeeze top 30-minute cloud? We do have third Keltner down, right around this psychological 13,000. The rutty. Same thing, 30-minute squeeze right on the second Keltner. Should we give out pre-market lows and the squeeze bottom, we could head down to third Keltner. Ruddy might be the first to tap its Ichimoku. This 30-minute squeeze is pretty tight, pretty thin, not that well established. So keep an eye on Ruddy. It could be the first to tap 30-minute Ichimoku right around 1940. So we'll have an indication if we get a rejection there or get through. Ruddy could be kind of the first to do it. YM, a little bit below its daily squeeze, which is starting to open up. And really, it could run down, hit third Keltner, and get back above this daily squeeze, keeping it intact. Those are all potential scenarios that can happen. This 30-minute squeeze on YM is getting very tight as it's running into the top. So let's see if it can try to reach outside of that to get back up to the second Keltner, or if it just rejects and heads down to slap this third Keltner before coming back. It tends to be, go back and look, historically, price action stays in between. Oh, darn it, there we go. That's the second Keltner. The third Keltner is way down here. Okay. Historically, we usually don't reach outside of third Keltners before going back to the mean. So, and, just like here, we almost got to second Keltner through the mean. Now we're down at second Keltner. Apple. Apple was trying to hold the entire market up on Thursday. I mean, if you saw all the indices gave up in the first 30-minute candle, Apple, look at this, like 3 or 4 candles was trying to hold up. Got to this very, very key zone. Tapped it, rejected. Down, down, down. We are at the daily 200 on Apple. So that's a very good key sign. Engage for tech. Want to see Apple hold second Keltner and this daily 200, which are creating a zone that we've already bounced at pre-market. So let's see if we go back to retest it. If we do, this would be a great spot to take Apple long. But she does report earnings this week, and we also have a trend line that we're coming up on. Let's take a look real quick to see. I think that's just a mess up, because that trend line should be way down here. It's probably a daily trend line. I'll just get rid of that. Anyway, on Apple, we do not have the 30-minute squeeze. Let's just load this up so we can double check everything. Okay, it says one candle into a 30-minute squeeze, so these clouds are probably about to pop up on Apple, something to keep an eye at. They will most likely be landing near pre-market highs and lows. All in all, I think we might see some relief pop, and then probably some comeback to retest lows. Keep an eye on this zone on Apple. Should this give up in the daily 200, we will most likely get down to that third Keltner, which is aligned with 155, a very, very big key number on Apple. If you don't know, go back and look at it. We were stuck below 155 most of last year. Once we got through, I think it was sometime in the fall, we have lived life above 155. So it is very key on Apple. Should this 200 second Keltner give out, that is the target we are headed to for them to pick it back up. And should we get going to the upside, I mean, we should just be aiming for the next Keltner up at this point, which is up near this 30-minute Ichimoku. AMD got an upgrade this morning. Don't know if that's enough to just send it flying. We are down below 90. Man, AMD kind of gave out the first on Wednesday, really. Chips looked weak and gave out while other things were still trying to push. Also, with Ichimoku clouds, this one being so big means most likely today we aren't going to get through it, but you can see tomorrow it's starting to thin up. So, on AMD today, wouldn't be surprised for us to chop around this 30-minute squeeze and these key levels. This, basically 88 is an old POC. Same with this 89. So yeah, I could see us chop through here into tomorrow. AMD reports next week. And yeah, AMD's up a little. Raymond James upgrade, citing strong confidence. So yeah, not a bad candidate for upside today. We do have this next squeeze up at around 91. So not a bad candidate with the upgrade to see if it could lead. But overall, got to be careful trying to be bullish. We should start seeing some bounces, but let things prove themselves. And not to go back to review and what we did, but we reviewed all those indices that got up to their daily moving averages and rejected. The key point I wanted to make, at least with that, is we have to understand what a bullish market looks like, and when we're at a deciding point, VIX at 20 and all the indices at the moving averages is a deciding point. We are not technically in a bullish market until we are over the indices, hold them, stay above them, and start to push off of them at the same time that VIX dies below 20. That would have signified kind of the return of a bullish market, but here we are. So AMD, not a bad candidate. About 90, 91 is where I could see it getting up to today before settling. Amazon down hard. Let's see. We reject the daily means. We're down at key level. Let's see if that key level can hold, and we can push off of the second Keltner and this 2881. Amazon reports on Thursday, and this will be the last earnings before the split. So it could start a fun rally after that earnings and lead into June. Downside. Ooh, I forgot about these. These, I believe, are potential gaps on Amazon. Let's go take a quick look. No. Okay, I guess they're just the zones that held us at the lows. Oh, here's the gaps. Okay, let me extend these real quick so we can see what we're looking at here. All right, so we had a large gap and a smaller gap. Let's extend this one. All right. Now that changes things a little. So, now that we zoom in, we had two gaps around the last earnings on Amazon. We had a large gap and a smaller gap. One was, I believe, before and after earnings. So we have fallen in to the large gap, which is the larger shaded area. And then we are in the smaller now. So would not be surprised to see Amazon dip down to finish filling at least the smaller gap. Could be a great spot for it to be picked back up off of. So right at around this 25.35, let's just go look at it. 25.35.65. So would not be surprised to see us hold that. If we lose that, we could just start rushing down to these other two key levels and to finish filling the gap before they report on Friday. So key levels I'll be watching on Amazon. Should it start to get going higher? Psychological 3000. It's up above in this 30-minute Ichimoku. I'm not covering BA. Cat had that epic run up, giving it all back with the market. It is at the daily 50 and starting to catch a bounce. It does have the daily 200 just below. So I wouldn't be surprised if we do continue selling on the market for it to settle in between this daily 200 and daily 50 to springboard higher. Facebook sub 200. This thing is just beat up. Not a lot of interest here. They're not really even picking it up that much. Just even getting back to the daily mean is usually a sideways thing. So, not a lot of interest. Basically, watch pre-market low, watch pre-market high. And yeah, I'd have to go look around to see if I have a drawing set down in these levels. Yeah, I do. Somewhere. I even have one called When Facebook's Less Than 240. Interesting. So, we do have some levels below that we can revisit. At this 176, 170. So those might be levels to stop the bleed on Facebook. They, I assume, report, yeah, the 27th. That's just Wednesday after the bell. So we'll see what we get there. Google. Oh, shit. Down at the third Keltner. So, not really expecting to see Google go lower. And wouldn't be surprised for some sideways action into earnings, which was, Tuesday after the bell. So, not a huge interest here, but as long as they don't completely tank on, or, shit the bed on earnings and have a bad report, this is going to be quite an epic dip by being down at third Keltner. And, Google has led the market in the past. Go back and look at last January. January of 21, when Apple was living life below 155, Google was kind of leading the market. So it would be super cool to see Google have a great beat on earnings, get bought up, and stick around this third Keltner for an epic run up. GS. Banks were pretty strong last week. You know, pretty damn strong rally when compared to a lot of tech names. But here you go, ran into daily squeeze top. And here we are at daily squeeze bottom. So, if we can have a pullback to retest pre-market lows and tap this daily squeeze bottom, would be a great spot to go long on Vixx. With this 30-minute Ichimoku being so high above, probably not going to test it today. So I could see a slip, sideways action, base at this daily squeeze cloud, and feed into tomorrow, where this will come down closer and we can get through it. What in the hell is this candle? Jeez, JP Morgan fell way out. Do we have any news on that? Where's my news? There it is. Nope, no news. Just, I guess opened really low. And shot right back up. Third Keltner opened way below it, shot back up. So we'll see. JPM is probably going to take a break with that kind of a pre-market movement and just go sideways. We can see that 30-minute is getting down here tomorrow, so I can see us go sideways into it and maybe a little gap up for banks. Microsoft reporting tomorrow. Not a lot of interest. Basically, I want to see it base. And yeah, same thing. We can kind of go sideways into this Ichimoku tomorrow. Looks like we got a flat top around 276. They report tomorrow after the bell. So Microsoft and Google are going to be key focus Wednesday through Friday. Netflix, don't touch it. There's no point. If you've never seen Netflix after a bad earnings, basically 4 to 5 weeks, it is untouchable. It will just go sideways. Don't touch it. Vidi reporting. Oh yeah, the end of May. So we got plenty of time on Vidi. So yeah, we could see some good chip rotation after they got beat up last week. They don't report this week. AMD reports next week. So we could see some nice chip rotation if we're going to see, basically get ready for a lot of rotation this week with big tech reporting, with everything down so much. There's going to be a lot of rotation and basing for names. But chips have a good chance to lead. NVIDIA could run on AMD's upgrades as a sympathy. Let's see. I want to see it hold this 190, which is about where that third Keltner is going to come in today in the squeeze bottom. And it should set up a decent long for the rest of the week. Watching the 200s, 205s, 210s. Tomorrow we'll have a flat 197 top. So wouldn't be surprised for some sideways action and then gapping through 197 tomorrow. Qs. And I'm going to speed this up to get through. We are down near the third Keltner. Tight 30-minute squeeze. Ichimoku not too far with a 1 hour squeeze above. So, wouldn't be surprised for us to fight our way up to 326 just to reject and come back down to 320 to test that live during the cash session. But, let's see, we could see some tech rotation. If this gets through 326, 328, QQQ will be back over the 30-minute Ichimoku. 330 is going to be very tough. So, we'll have to see. Roku reporting this week. Let's see if they can say something to save their ass, because they have been getting beat up 4 months, and Netflix lost all those subscribers. I would say as low as Roku is, it might need to have a little bit of a relief bounce before they sell it again lower. But we do have that third Keltner down at 88. Not going to be a huge focus. They're going to jack these premiums high because it's earnings this week. So I'd rather just wait and see and let it play out. Let's see if it can get above 100 before it reports earnings. It could set up a really nice pop. Roku's, strategic. They got a lot of partnerships out there. So Netflix, losing as many subs as it did, can happen for other streamers. But Roku has a lot of partnerships going on. So it's positioned well. Shop reports next week. Already down a third Keltner. There were some news blips last week about Amazon. What was it? Having some point of sale or something so that they compete more with Shopify. So that could mean bad news for Shopify. It could be on a trajectory to get back to a more sane valuation. But it is at third Keltner. Maybe they have digested that little Amazon news and whatnot. And it could set up a nice rally this week into its earnings next week. So again, we have another decent candidate for upside because it's kind of hit the extent of downside. Snow got an upgrade this morning, and when did they report? Yeah, they report. I'm gonna go read that actually. This little article. It's probably worth a read. Obviously, I'm not going to do it right now, but look at this. So with analysts and Snowflake, somewhat bullish, kind of indifferent, super bullish, somewhat bearish is 0, and bearish is 0. So not bad. Yeah, I'd say Snowflake is also a decent candidate to try to do a little bit of leading, or at least recover. But we've got this gnarly downtrend that we need to break. So not going to really take interest in this until it does get through that, which would kind of mean getting over this 30-minute Ichimoku. Most likely won't do it today, but tomorrow it gets thin, could gap through it. So yeah, I like Snow for the upside as well. SPX. Man, sometimes a trend line is just taking us somewhere, right? And every time we tap that trend line, you should be taking a position to go with it, right? I called these out Thursday and Friday, but once they set in, it was just like any pop that got near the trend line, boom, right back down. So let's see. Right now, these are kind of my upside targets to get back to now that we are below them on SPX. But it'll be the same thesis as ES and SPY. I've already covered ES, so let's cover SPY since we have a little bit of that pre-market to deal with. And again on SPY, these are my key levels to definitely keep an eye on now that we're back down here. These levels are kind of what saved us and allowed us to bounce in the Russian invasion. I picked the wrong... No, I got the right one. Okay. Yep. So, we did slip outside of them, but when we came back to retest that invasion, this is what kind of held us up, these zones. So as we get back to them, with the sell-off from Thursday and Friday, blah, 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 these are the key zones I'll be watching to hold us up should we start to slip lower again. 420 on SPY, gonna be interesting. Again, wouldn't be surprised for a sideways day. Watch this 426. Where that 30-minute Ichimoku is, we can reach outside of this 30-minute squeeze to hit that, fall back, yada yada. But watch these key levels on SPY this week. On Square, right down at 100. Very big key level, psychological, and from its past. So let's see if it can hold 100. Wouldn't be surprised for some sideways action. Get through this downtrend. Yeah, sideways action. And then a potential gap through the downtrend and the 30-minute Ichimoku. So I like Square. I feel like I was watching calls for this week and they held Beast really well, even in this whole sell-off. Looking at like the 105s, the 110s, the 115s, the 120s. They just all sat at Beast on Friday. So yeah, I like Square for an upside target. They report next week, so good to go there. Tesla reported last week, had this big old pop. We have come all the way back to that pop point. So would not be surprised for Tesla to take a little dip, retest those levels, hit this squeeze bottom before really starting a journey back up. Clearly after earnings they like what they saw and they have been taking profit on the trade on a pop on earnings, right? They take position here, it pops, they take profit, kill retail, right back to where they got in before, and do it again. So definitely like Tesla for the upside. Want to see it hold this 4-hour squeeze bottom. We have the daily down below should we try to get through this 4-hour bottom. You know, really it's only going to get dragged down if the indices go down further. But all in all, looks like Tesla wants to run. And yeah, definitely mark these levels. 1030, 1020, 1000. I would mark 1009 as well. 1009 is very key. But, you know, on Friday, we hit this 1000, back up to 120. We reach up to 130. And this 30-minute Ichimoku top, or bottom, 30-minute Ichimoku right here. We reject that. But we hold above. So these 3 levels, very key. We tap, tap, stay at them, tap, reject, blah, blah, blah. We have the daily 21 and the daily 8 kind of up and straddling this 1009 key level. So let it base, let it find itself. I want to see a retap of the squeeze cloud in 970, but hold pre-market low and then start the journey back up. I like Tesla long this week. Already got through earnings and could lead tech while the big names report. Last but not least, we're going to hit Vixx, and sorry to run so close to open, but just wanted to give everybody something. Keep an eye on Vixx. Should we start to go back and fill the gap? Could get a bounce point around 28. Obviously, if we're going down and filling the gap, that means the market's going to rally. So it could get a bounce around 28 for everything to come back. 30 is very key, 28 is very key, and we're stuck between them. So wouldn't be surprised for some chop in between 30, 28 today. Let this Ichimoku get up there, and we could see some more reversal type action tomorrow. But all in all, hope this prep was helpful. See you guys in the chat room. Good luck today. Let's kill it.